Your credit score is your financial reputation in Canada. It decides whether you get that apartment, that car, or even a better mortgage rate. And in some industries, it even affects your chances of getting hired. You don't need to be rich to build good credit. Just responsible and consistent. By my mid-20s, I grew my credit score to above 800. And if I can do this as an immigrant from Nigeria, you can do it too. So in today's video, I'm gonna break down what a credit score means in Canada, how it works, and how you can build a strong one too. Let's get into it. Picture this. You're at recess, it's elementary school, and you wanna borrow your friend's bike. And he goes, I don't know, have you ever returned anything on time before? That's basically what a credit score is. It's your financial reputation, your adult trust score. In official terms, a credit score is a 3-digit number that tells lenders how trustworthy you are with borrowed money. It ranges from 300 to 900. Think of it like a report card, but instead of focusing on math and spelling, it's all about paying your bills on time, not owing too much money, and using credit responsibly. In a report card sense, anything from 800 and above is an A student. 700 plus, that's a B. 600 and above, that's a C. And anything below that is when the teachers start to become concerned. But it's not impossible to improve that grade. It will just take responsible, consistent work from the student to push the grades back up. But why should you care? I come from a country where credit scores weren't a thing, right? But in places like Canada, you need to understand what the value of a credit score is in your day-to-day financial life. Because adults need to borrow things like a mortgage on a house, a car loan, a phone on a plan, a credit card. And a credit score is the report card that lets these lenders that you're loaning money from understand if they can trust you and to what extent. And lenders will check your score and ask themselves, should we trust you? Will you pay us back? So the better your credit score, the easier it is to get approved for things, get lower interest rates, and owe less money, pay less money over time, which will also allow you to save more and build towards financial freedom. Without a good credit score, you might need a co-signer for things like an apartment, a car loan, or you might end up paying even higher interest rates, and that's no fun when you're trying to build wealth. Here are the 5 things that affect your credit the most. 1 is your payment history. Are you paying your bills on time before the due date? Number 2, your credit utilization. You ideally want to keep your usage below 30%. So here's a simple example. Let's say you have 2 credit cards. To make it easy, both of them have a limit of $5,000 each, meaning your total credit available is $10,000. Okay? So let's say for this month, you spend $2,000 on the first credit card and $500 on the second credit card. You have now used a total of $2,500 in credit, which means 2,500 divided by 10,000, you are using 25% of your credit and you are good and below the 30% ideal usage. In this scenario, you want to keep things below $3,000 across all credit products in total summation. Okay? Number 3, credit history. How long have you had credit? So let's say one person has credit for 1 year versus another one has 7 years of credit. So think about this in a sports scenario. If you've been playing for 7 years and you've been playing consistently versus one has been playing for 1 year, if he hasn't been doing too much yet, you're more likely to draft the 7-year person. Why? They have a trustworthy background and experience that you can approve of. Okay? That's essentially how it comes in the credit world. Number 4. Credit mix. Do you have a mix of different types of credit products? So be it credit cards, lines of credits, personal loans, car loans, phone plans, and mortgages. I'm not saying go and apply it for a bunch of credit products, okay? I'm just explaining that the different types of credit that you have look better on your credit report. Number 5, hard checks. How frequently are you applying for credit? Now, you don't want to apply for too many credit products in a short period of time because this is going to be detrimental to your credit report. The banks and the lenders are going to be like, why are you applying for so many credit products in a short period of time? That's not a good sign. That means you need money. You're most likely not going to be able to pay other things back. That's how they look at it, right? So a hard check is when you are actually going out, filling out an application and doing it from the ground up, versus a soft check is usually when you're pre-approved. Those ones a lot better because they typically won't show up on your credit report as an application or anything. If you're pre-approved for a new line of credit or you're pre-approved for a credit limit increase, that's beautiful. Take that if it makes sense to your situation, because it's much nicer than having to apply and request for it on your own doing. So simply keep your balances low and pay on time. Everything I've mentioned, these 5 points, 80% of the game right there. How do you check your credit score? So in Canada, you can do this for free actually through apps like Borrowwell, Credit Karma, or even your online banking app. Personally, I check mine at least once a month through my online banking app. It's very easy. Most apps and banks now have connections through TransUnion or Equifax, which are credit checking companies. That makes life easier. So I just like to, one, stay on top of my report, make sure everything is looking good and I'm moving nicely. And two, just make sure that there's no red flags in there, because the last thing you want is any surprises of, oh, someone else has been using your SIN for credit and you weren't aware of that and it's too late. So for those reasons, you want to stay on top of your credit score. It's basically like checking your report card every now and then, checking your grades to see where you're at and see where, if any, additional work needs to be put in. Now, here are some things to be aware of that will hurt your credit score. Missing your payments, applying for too many credit cards at once, maxing out your credit products, and honestly, not using credit at all. Now, that's a weird one, because essentially what that means is, hey, I'm not using any credit. Why am I being diminished for not using credit? Well, here's the thing. Let's say you never have any credit product. You pay for everything debit on cash, and then one day you want to get a mortgage, and the bank is like, well, I don't know, buddy. Like, you've never actually shown me a report card of you having done payments in lower ends with other people. So how do I know you're going to do it this time? It's like, well, I have cash. What do you mean? Yeah, but you don't have all the cash that you need. So unless you have all the cash or pay a little bit more, I can't really trust you and give you a great rate. Why? Because you haven't proved even in the smaller times. And there's no way that I can know that you're actually responsible. It's crazy, right? But that's how it works. Not using any credit at all is actually detrimental if you need a large amount of credit in the long run. So keep that in mind. Even if you're starting from zero, it is very possible to build a great credit score. You can focus on things like getting a secure credit card or a student credit card. Set up automatic payments so that you never miss your credit payments, okay, before the due date. If you don't like using credit, you can shop on little things, be it buy a coffee every once a month or gas every once a month, just to get the credit bureau showing that, okay, you know what? This guy's been using credit here and there, right? He's paying it off consistently. That's great. Keep your balances low and don't apply for too many credit products, okay? If you don't need it, don't do it. And always check your credit score every now and then. Like I mentioned, I always check mine once a month. It's not about being perfect. Focus on consistency. Now let's wrap this up like we're still at recess. Your credit score is your trust score. It helps you get approved for big things like a house, a car. And you can build a great score by focusing on paying your bills on time, not applying for too many cards at once, keeping your credit utilization low, and keeping track of your credit score by checking it every now and then. I hope this video was helpful to you, and I wish you best of luck in your credit building journey in Canada. Cheers.